Cool beans, cool beans, cool beans, cool beans. Welcome, 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 ladies and gentlemen. Welcome to the midweek fundamentals in technical analysis. Um, Before I jump into it, let me give a quick disclaimer. This is not financial advice. Anything that we share during this analysis is for educational purposes only. I repeat, this is not financial advice. Anything that we share during this analysis is for educational purposes only. Cool beans, cool beans. Welcome, 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 everybody in the chat. So, with that being said, let's jump into it. So, looking back at the beginning of the week, I told everybody that was on the call that I wanted to see how price opened up in regard to the levels that we opened up at, right? Within this blue shaded area in between the weekly premium PD array levels, right? I told you guys that if we broke above it aggressively and closed above it, then I would like to see us come back, retest these PD arrays in the area within them, right? Respect that, right? Continue higher, or break back below them, close below them, and then I will look for us to in still be on the side of bearishness to the downside to these PD array levels that we see to the downside, right? So basically, everybody want to come in now. So basically, um, if we break and close below the fair value gap that we're currently inside, daily time frame, right? Um, I can put a little about it. We really need that. If we break and close below here, then yeah, still on the side of bearishness down to these PD arrays and this monthly sales side equivalent, right? However, if we respect this daily fair value gap here, then we might see the dollar run back up to this monthly buy side liquidity, right? And if we do get up here in this area, I don't see why um they wouldn't run price up here to this volume imbalance here from earlier this month from the 15th and the 14th, right? So that's the if this then that analysis, right? But yeah, it depends a lot um with fundamentals, what's going on with fundamentals as well. So that's why I'm interested to see what was Carmen's takeaway from the FOMC meetings today. Um yeah, so can't wait to hear what she has for us tonight. Something like that. All right, there we go. So yeah, that's pretty much it for the dollar. Let's look at Euro USD. We're still on the play for the bullish, and this is really why I think we're still in the play for the sell side for the dollar, right? Because look at EU. EU look like she's just ready to blast off to run these premium PD arrays to the upside, right? Because remember, I told you guys as long I would have loved to see price respect these monthly PD arrays and push up higher off of those levels. But remember, we allotted for price to come back down into this weekly fair value gap, right? And so we didn't break below it, close below it, or we didn't close below the consequent approachment, right? So I think Euro USD continues to push up hard, pushing the dollar to the downside, right? So we'll see. We'll definitely see. I could definitely be wrong, just like I was wrong here when I wanted to see the dollar retest this PD array level and continue lower. So yeah, I could definitely be wrong. Uh, Looking at what? We need to look at NZD USD. We need to look at GBP USD. Let's look at GBP USD. Um, yeah, I still want to see us push higher. I still, we're gonna see. We're gonna see if we can break back above this inverted fair value gap. So yeah, if we can't break back above this aggressively and really these PD array levels here too, the monthly and weekly PD array levels and get above those, if we respect this inversion fair value gap as coined by Michael Huddleston, then yeah, we could see GBP swing low to run this sell side liquidity, right? Yeah. Um, because GBP USD already ran that month buy side liquidity that we was targeting from December the 23rd, right? NZD and Euro hadn't ran it yet, right? December, well, this is December 28th for NZD USD. It's a couple of days off, but see the pound December the 28th too. So the pound and NZD monthly buy side liquidities was created on the same day, on the 28th. Euros monthly high was created. It was created on the 28th too. I'm tripping. Yeah, it was all of them was created on the 28th. So as you can see, Euro hasn't ran its monthly buy side liquidity that was created on the 28th, and neither has NZDUSD. Even more reason why I think price is going to continue to push higher for currencies, right? Now, I don't know about the pound, right? Because, like I said, we already ranked that monthly buy side liquidity, right? And I can take this. So we already ranked that monthly for GBP USD. So I would like to see it if we get back above it aggressively and close above it, then Euro and NZD is definitely gonna follow behind it, right? Um, so yeah, that's what you can expect out of currencies going forward. So basically, we still on the same side um that we've been on. We just need to see, how the market really reacts to FOMC. And I really love what has to say, and there she go. And I really can't wait to hear what Corman has to say about her takeaway from FOMCs. Yeah, let's move on to futures. Um, Futures is relentless, definitely relentless. It's definitely an overbought market. It's relentless, and Monday, I told you guys that I expected us to pull back up into Friday's premium, right? And I wanted to see how price reacted to those levels. You see, we closed above the weekly, the daily PD array levels. Um, and yesterday was another aggressive day to the upside, and today was just extremely aggressive to the upside. And so, yeah, I would definitely wouldn't try to sell this market. I wouldn't sell against all of this right here that we see. So, um, yeah, you gotta follow price action. And so when we had the break here, um, we already know that I didn't trade today. Um, and so let me get this right. Give me a second. Trying to do it with my eye. About right. Close enough, mate. There we go. Um, yeah. So we came back down yesterday and we tested Monday's discount PD array, right? And then we continue higher today to go ahead and run the weekly buy side liquidity. So we still got more news this week. So yeah, that's why I would definitely I definitely want to hear what Corman has to say about fundamentals because that's what I'm going to base um a large part of my analysis off of is because all the things that's going on in the news this week, and with price just pushing up like it is, I definitely need to understand, engage the fundamentals, um, correlated with price, um, because I would, of course, everybody's expecting a pullback sometime, right? Anytime, any day, but it doesn't have to be any day. It might not be today or tomorrow or Friday or even next week, but we know a pullback is coming. So I like to see what Corman has to say about these raids. FOMCO, Jerome wrong, and yeah, I I I'll be able to make a better assessment after that. But as of now, of course staying on the side of the trend, staying with the trend. So we will continue to look for pullbacks down into a discount price to run the previous swing high or the previous buy side liquidity or whatever you want to call it. Cool beans. So yep, somewhere up in there. There we go. look how that weekly buy side liquidity just coincidentally happened to almost be the consequent encroachment of the daily PD array. But yeah, I'll be expecting price to pull back down into this daily PD array range and look to long from there, right? And of course, if we break through it aggressively, then we will start to look for price to attack sell side liquidity, right? Cool beans, cool beans. But so far price have been respecting those 62, 79% pullbacks. So we'll see, we'll see. Same thing with NQ. Same thing, same thing. This is an hour fair value gap that I got marked right there. This hour fair value gap. Um, I would like to see us because if you notice, ES has already ran the weekly buy side liquidity and made a new high, right? Already ran and made a new high. So I expect I expect NQ. Sorry about that. So yeah, I expect NQ to continue pushing higher to catch up with ES, right? To run this weekly buy side liquidity. So on the hour time frame, right? If you break it down, I want to see this left open. I want to see this fair value gap right here left open. I want to see price stay above consequent encroachment of the fair value gap, right? The hourly fair value gap. And I want to see us run higher from that consequent encroachment to run that buy side liquidity, weekly buy side liquidity, right? Cool beans, cool beans. And so that's what I'm looking for going forward for the rest of the week, to end the trading week. Um, I keep you guys on standby after I hear what Coleman have for us for fundamentals, and I give you an update from there in the group chat. So with that being said, I'm gonna pass it over to Coleman so she can give us that saucy fundamental. It's all yours. Please don't tell me Coleman got technical issues tonight. Not.
Mm-mm. I'm here. Um, okay, so first of all, um, hello everyone. Um, hope that everyone is doing well. I um just had way more sugar than I should have. So I'm just sitting here. I'm being very intentional with what I say. Um, I am going to share my screen, but um I'm going to start off by saying I have a lot of tabs open. Um, yeah, it's a lot. I was like sifting through the Fed's website and yeah, I kept clicking on stuff and I think I have, I don't know, maybe I don't know, 14 tabs open or something like that. We're not going to go through all of them, just because of time. And then also, some of them are just tabs that I opened up because I wanted to research a couple of things, just about the Fed meeting today, or not the meeting, so to say, but the statement today, press conference and stuff. So with that being said, I'm going to go ahead and scroll to today's news. If you haven't heard, didn't see it, the Fed did not change rates. Whew. To me, it's very interesting to see the Fed not change rates, but at the same time, um, I think there was a revision to the Fed's plan for what they wanted to do for this year, and now they're hovering at a figure around 3. So, as we continue to go throughout the year, if you don't know how to get to the Fed calendar, I am going to show that to you now. So, on the Fed's website, under news and events, there's a calendar here, and you can sort the calendar. Sorry, you can sort the calendar by however you want to see it. So typically, what I like to look at is FOMC meetings. So you can click to look at those. I also wait, there is a better calendar than this. Okay, so this one. So this is typically the calendar that I go through and look at, because everything that I pretty much want to see is here. So at the top, it'll tell you that the Fed holds 8 regular scheduled meetings throughout the year. And you can actually start at the top and just scroll through the bottom. So the meetings that we'll all look at and the ones that we care about: March, which is the one we just had, June, September, and December. So what that kind of means to me is, if we do have other Fed meetings, but the Fed meetings with the economic projections are typically the meetings that we normally look at to get a gauge on what the Fed is going to do with rates. Those are typically the times when we would most likely get a rate change. Now we are in a presidential election year, and some people might say, why do I keep bringing that up? Well, because there is a lot of things that have to happen between now and November, when the election happens, to actually, if you're trying to sway a part of the population, you need to make sure that they're able to visibly see the things that you're trying to do and the things that you're trying to show that is helping them. So if we look at it from that standpoint, we have technically, between now and then, 2 Fed meetings where we would most likely get one of those changes. We could possibly get it next Fed meeting, technically. But June, maybe July. But if I had to just say, it would may either be the May or June meeting, July, and then September. July and September, just because you need something to help overcome that summer slump. And then September is the meeting that also precedes the budgeting deadlines and the changeover in the fiscal budgets for not only the Fed, but for a lot of companies. So there's a lot that happens there. So we have several meetings to at least get two in. And then it is possible that we'll get a third in December if we don't get all of them between now and the election. So I always refer back to this calendar if I'm unsure, if I don't really know of what's going on for the year, you can always come here and look. And then also just the overall calendar in general. You can come here, sort through things, see when the Fed meetings are going to be, and then proceed from there. So it'll show you what time the next meeting is, what we're actually going to be looking at during those meetings. So like the May meeting, there's a press conference, which means most likely there will be some type of rate news associated with that next meeting that I was just telling you guys about. So we shall see. All right. So this is the statement that came out from the Fed earlier today. So when Jerome Powell was reading the statement, this is typically what gets read. And if this doesn't get read, sorry, there is some other document that is very, very similar to this that is read. Essentially, there's a targeted range that the Fed is trying to keep rates in. And some of these things we've talked about before, but the Fed is very repetitive, if you didn't know that already. So this sentence right here, I promise you, you can search the Fed's website and almost every statement has it in it somewhere for like the last 18 years. This statement is so annoying. The committee seeks to achieve maximum employment and inflation rate at 2% over the long run. The over the long run part might not necessarily be there, but maximum employment and inflation rate of 2% is what you're going to see in most Fed statements. And how we're going to get there if we're not currently lowering rates, if we're not currently doing those other things on the back end to get there, don't know. It's very hard to get down to 2% from where we are. And then also take into account the fact that there are social programs built around paying people based on the rate of inflation. And also, if inflation goes up, then those programs have to pay out more money. So it is advantageous for the Fed to get those rates down. However, you have to be able to do so without breaking the whole system. So, in support of its goals, the committee decided to maintain a target rate for the Fed's fund rate at 5.25% to 5.5%. So, in considering any adjustments to the rate, the committee will carefully assess incoming data, evolving outlook, and the balance of risk. Essentially, what that is saying is the Fed is going to take into account all of the news that we look at on the Forex Factory calendar. Evolving outlook could be putting all of that data into a matrix, into a formula that they have, and economic projections. Balance, and then also not only economic but geopolitical risk, because remember, if we were to go to war, if another pandemic were to happen, that kind of throws all of that off. So you have to kind of factor in some of those things to an extent, but then that also is included in balance of risk. Um, so, um, essentially, when we saw the market moving earlier today, it literally was when this statement came out. The press conference hadn't even happened yet. That 2 o'clock move was solely based off of this. And the part that the markets generally moved off of, because even in the press conference, as he talked about some of these things, the market really didn't like budge just a whole lot. But it was the fact that the rate stayed the same and what the considerations were going to be. Um, so this is also important. I was going to skip over this sentence, but it is important. The committee does not expect it to be appropriate to reduce the target range until it has gained greater confidence that inflation is moving substantially, sustainably, above or towards 2%. So essentially, if we have the Fed telling us what they're looking at, now we know what to look at. How do we get these inflation numbers? CPE and CPI. Um, so when we have personal consumption expenditure that comes out, and when we have consumer price index news come out and producer price index news come out, those are all inflation indicators. And inside of those reports, they all, to to some degree or another, tell us, hey, this is what inflation is like in this region of the United States, in this sector of the market, in this generalized area with this demographic. So they know these aren't things that are just coming out of left field. These are things that can be tracked. So as the Fed continues to look at these numbers, these are the things that they're going to be looking at. So now we know what to look at. And we actually have one of those that comes out tomorrow. Um, and I'm just going to flip back over to the Forex Factory calendar really quick since I said it, and we're just going to cover that data that's coming out tomorrow. So flash manufacturing and services news coming out for most of the Eurozone. So European Union, the UK, um, the Swiss bank has rate and policy news coming out tomorrow. Um, the United States has flash and services news flash manufacturing and services news, sorry, coming out tomorrow. Unemployment claims, remember that unemployment claims news is going to be high impact or a higher impact news item compared to before, just because of some of the recent events in the United States. And so just trying to keep track of that, but then also the seasonal change. Now we're not necessarily tracking temp workers anymore. And these numbers are really going to be those numbers that really drive home the fact that we either need or don't need a rate change. And then we have Jerome Powell speaking on Friday. So just make sure that you're aware of what he's saying on Friday. Let's see. Oh wait, the link is on the Fed's website. So a link to his speech for Friday, it's going to be a Fed Now speech, but it's right here. So this is the homepage for the Fed. Right here is the link to that speech. So it's Fed Listens. Um, he's going to be talking about a post-pandemic economy. These are going to be things that are going to add on to the press conference and the statement from today. He's also going to go over these economic projections. I know some of you are probably like, how do I know he's going over those things? Well, because the Fed is repetitive. Um, Anytime we have major news that comes out for the Fed and then they do a speech later on, those press members who did not get a chance to get their questions answered, or those people who he said, I'll get back to you later. They have a certain amount of time to get back to those people, but they try to get those questions answered as soon as possible. Or if there is a Q&A, they ask them. So these topics just don't immediately go away. So summary of economic projections. I'm not going through this. I do want to highlight that unemployment rate, PCE, core PCE. I literally just said that as to what the Fed looks at. It's right here in their documentation of what they're looking at and measuring. CPI will be in here somewhere. But it's 17 pages. It's dot plots, it's bar graphs, charts, or column charts, whatever you prefer to call them. They're all in here. It shows you the projections. You can look at this projection versus the last one. And on here it says, I think I just passed it. It's talking about the real GDP. There is find the right one. It's this one. GDP Now. You can come here and you can actually get like live updates of the GDP. It's not going to be live like hour by hour or day by day. But they do